Welcome Professor Vineet Kansal, Pro Vice Chancellor AKTU, our three distinguished panelists whom I'll be introduced shortly. Mr. Praveen Dwivedi, Senior Vice President LMA, and all of you. Before I introduce the panelists, I'll say a few words about LMA for benefit of those who are not familiar with it. LMA is a vibrant body of over 2,000 multidisciplinary professionals affiliated to All India Management Association. We organize management development programs and high impact interactions on public policy issues with top of the line domain experts. LMA has been decorated with the Best Management Association in the country 7 times. This is a joint AKTU LMA program, and I take this opportunity of welcoming all of you to this session on behalf of AKTU and LME. I now take this opportunity of introducing our distinguished panel. Mr. Manik Gupta, an alumnus of La Martiniere College, Lucknow. Manik graduated with honors in commerce from Shri Ram College of Commerce and thereafter completed his Master of International Business from Indian Institute of Foreign Trade, New Delhi. Manik Gupta, at the age of 40 years, rose to the position of country head and managing director of Glencore in Agriculture India Private Limited, the Indian arm of a leading global agri-commodity company. He sets and evolves the strategic direction for the company's business while nurturing a strong leadership team to drive its education. Prior to working for India office of the company, Manik held several international executive positions in Singapore, Dubai, Vietnam, Indonesia, and Netherlands. He is credited with starting the cotton trading desk for Glencore in India and expanding the turnover to the huge level. Our next panelist is Mr. Siraj A. Chaudhary, Managing Director and CEO of National Collateral Management Services Limited. Mr. Siraj Chaudhary retired as Chairman and CEO of Cargill India after serving for 24 years. He is an industry expert, thought leader, innovator, and an influential voice on issues concerning agriculture, food safety, and nutrition. He has been a commodity risk management and food processing professional for over 28 years with the stints at ITC Limited and State Trading Corporation of India, STC, before joining Cargill. Mr. Siraj Chaudhary has been actively engaged with World Economic Forum on their agriculture agenda for India. He is also an alumnus of La Martiniere College, Lucknow, did his graduation from Shri Ram College for Commerce and MBA from IIFT New Delhi. Our third panelist is Mr. Sanjeev Kumar Asthana. He holds the position of Chairman for Agriculture Skill Council of India, Chief Executive Officer for Ruchi Soya Industries Limited, and Director and Managing Partner at iFarm Venture Advisors Private Limited. Mr. Asthana is also on the board of NCDX. He was earlier President of Reliance Retail. Mr. Asthana received a graduate degree from Rural Management Institute of Rural Management, Anand, and Master of International Business from Indian Institute of Foreign Trade. He studied at Mahanagar Boys, Lucknow, and did his graduation from University of Lucknow. So as you would see, all our three panelists have a strong Lucknow connection. They are keen to see UP grow and are prepared to contribute in any manner they can. I'm sure that government and the institutions in Lucknow would take full advantage of their expertise and experience. Now, let me share the format of this webinar. We were to first hear a few words from Dr. Navneet Sehgal, uh, but he has just informed that he will be joining a little late as he's engaged in a conversation with Secretary Government of India. And now we'll have three panelists who will make their presentations on various aspects of the subject. Since the proposal is to introduce commodity trading into the curriculum of management program, the first obvious question in the minds of the participants would be how the learning would be useful for students in improving their employment prospects and add value to self-employment opportunities for them. There would also be an issue of duration of an elective course if taken as complementary to an MBA program. Finding qualified faculty would also be an issue. I hope the distinguished panel will dwell on these issues also. A comprehensive note on the subject has already been uh, circulated to all the participants, and we take it as read. There will be a 15-20 minutes question answer session. You are requested to write your questions together with your name and affiliation and, and post it on the chat box. Please indicate the name of the panelist to whom it is addressed. The program will end with inputs of Dr. Vineet Kansal, Pro Vice Chancellor, and thereafter a vote of thanks by Senior Vice President, LMA, Mr. Praveen Dwivedi. Now I'll invite the first panelist, Mr. Manik Gupta, to make his presentation, and thereafter the two other speakers. Manik.
Thank you, Mr. Mathur. Thank you, LMA, and AKTU for this opportunity presented to us to present about commodities trading in front of this large audience from the education fraternity. I have made a small presentation, which I will shortly share, and which will make it a little bit more interesting and easier for me to talk about commodities. I hope the screen is now visible to all participants.
Okay.
Yes.
So thanks once again for this opportunity to present about commodities. I'm also very happy to be presenting with the other two co-panelists in whose footsteps I would say I have gone through, but albeit 15 years too late. And like Mr. Mathur said, all of us hail from Lucknow, and we are happy to contribute in whatever way we can. Commodity trading. Commodity trading seems to be, to an outsider, a bit of an esoteric subject. Something which conjures up images of freewheeling world of high rollers, living hard and taking outside risks. There is some historical truth to that image, though, but instead, all investors, whether big or small, participate in the commodity markets. A very simple and a definition that will probably resonate with a lot of people. Commodities are just raw or unprocessed materials that can be bought or sold and are used to make something else that eventually is consumed. We can see all around us, whatever our setting is, and whatever we see, which is eventually converted into a product, was once a commodity. A more kind of trading definition of commodity is that it is a basic good which is used in commerce, that is buy and sell, and that is interchangeable with other commodities. Now, when I say interchangeable with other commodities, I mean two things. One is a substitution effect, like cotton versus polyester, let's say, for example. And other is that, one bale of cotton and another bale of cotton will not be significantly different from each other. Commodities are most often used as inputs, as we went through in the very basic definition, that they are kind of building blocks of products. So they are used as inputs in the production of other goods or services. Now, investors and traders can buy and sell commodities. Now, this is really going to be the core of our discussion today. That uh, that what are the various class of people who actually trade commodities, and they are actually investors and traders can buy and sell commodities directly in the spot market. In trading parlance, we call it cash market, which means basically in the physical space, or via derivatives such as futures and options. Now, a lot of you may already know that you know that a future and option is a derivative, or uh, is a product, the underlying of which is the physical market. And there are people who who want to trade commodities, but don't want to actually take delivery of physical commodities, can actually participate in the commodity market by way of futures and options. Maybe we'll talk a little bit more about this in the future. Uh, Owning commodities in a broader portfolio is encouraged as a diversifier and a hedge against inflation. Now, commodity like currency, like equity, like bonds is an asset class, and a lot of pension funds, banks, they all trade commodities, and they want to keep commodities in their portfolio as a hedge against inflation. So when I say they want to keep commodities in their portfolio, doesn't mean that they will actually go and buy tons of wheat and rice and pulses and put it in a warehouse. There are other non-physical ways of trading commodities, which is what is derivatives, which is futures and options, and what is called exchange traded funds, ETFs. Now, like I said, commodities, almost everybody has uh, will have exposure to commodities. Are we as household people, are we as kind of non-business people, do we have exposure to commodity? Are you a commodity player? Now, did you have lunch today? What did you eat in lunch? Did you have dal, roti, chawal, dosa? Now, if you look at these four examples that I've given, they are all actually derivatives of commodities. Dal is like pulses, roti, let's say, is made of wheat, chawal is raw rice, and dosa, the batter of which is again made from pulses. The underlying commodities basically make these products, and we are all in touch with these commodities every day unknowingly. Did you have a beverage today? Tea, coffee, cold drink, milk, orange juice? Now, these are all commodities, and these are all traded in bulk world over. There are hedging mechanisms. There are, global trade flows in all these products. Do you have a sweet tooth? Do you like chocolate? Do you have sugar candy? Now, these are again, cocoa is a commodity which is, traded worldwide. Sugar is another commodity which is traded worldwide. And those are kind of building blocks of chocolate and, let's say, candy. Did you adjust the, let's say, air conditioning thermostat today? Now, if you did that, you are actually using electricity to do that. Now, how is electricity generated? Let's say, is generated let's say, the building block of that is coal, which is also a commodity which is traded world over. Now, did you use an air conditioner with copper wiring? Now, copper is another commodity which is traded world over and has derivatives and hedging possibilities. Now, did you refuel your vehicle today? Petrol, diesel, CNG, these are all commodities that we are in touch as individual consumers on a day-to-day basis without realizing, what goes behind bringing those commodities in product form to your doorstep. In fact, crude oil, petrol and diesel, obviously products of crude oil, is one of the highest traded commodity in the world. Are you sitting on a chair right now? Is it made of plastic or wood? Plastic is again, traded worldwide. Wood, timber is again a very, very large trade flow worldwide. Are you wearing an ornament today? Does it have gold, silver, or diamond? Again, this is something that, especially in the Indian context, people track gold and silver because of a large household consumption. And I'm sure that a lot of people must have read or heard that gold prices have gone from, over 50,000 rupees per 10 grams. So I think, so each of us as individuals, knowingly or unknowingly, are always in touch with commodities, and we have exposure to commodities. What fiber are you wearing today? Is it cotton, wool, or polyester? So cotton, these are all products which are traded worldwide. So any product today was a commodity yesterday. Now, I just want to talk about, I talked about the left side of the equation already in the previous slide, that there are various exposures at the consumer level we have. Let's say in terms of petrol and diesel prices, food prices, gold prices, edible oil prices, foreign travel, and energy prices, and there will be many more. But at a business level, at a consumer level, we don't feel the need to actively manage the price risk that emanates out of in those commodities. For example, food prices. Now, we are in the midst of a lockdown. As you all may have experienced, that as when the lockdown happened, people thought that there's going to be scarcity of food, and everybody started building household stocks, and actually prices did go up. So that was a real world situation where you saw demand over, demand being higher than supply and food prices going up. Same cases with gold. In the north of the country, just around Diwali, around Dhanteras time, everybody likes to buy gold. And the general thought is that closer to Dhanteras, the prices of gold will go up. So it's all about demand and supply. But as a consumer, because the total size of our demand is so small as individual consumers, that is actually uneconomical to actually hedge those price risks. And so we don't actively hedge those price risks. But whenever there is a big spike, it comes to the fore that we are exposed to those risks. For example, prices of onions. Now, we've all heard that prices of onion went to 100 rupees, 200 to 150 rupees a kilogram. And that's when we see it impacting, let's say, a household budget. So people take note of it, maybe, ration demand, and then the prices become more reasonable and demand matches with supply again. Foreign travel, if you're traveling to US and Europe, and before going, you need to buy your currency. You are always aware whether the currency is weaker or stronger and how expensive your foreign trip is going to be. So there are various consumer level risks that emanate from commodities that we are all exposed to, but we are not necessarily hedging those risks because of the size of the demand. But when you look at a business level, let's say you are an edible oil refiner. And as an edible oil refiner, you are mostly dependent on imported crude edible oil coming in mostly from 3 countries, either Malaysia, Indonesia for palm oil, South America for soybean oil, and let's say Black Sea or Ukraine for sun oil. As a business, if you want to run your business profitably, efficiently, you need to be able to identify what are the various risks in the entire supply chain and be able to hedge the ones that are worthy of hedging. Now, when I say worthy of hedging, the risks that if they go unhedged would create a very large risk for a business in terms of the bottom line. For example, if somebody, let's say there's an edible oil refiner and he sells edible oil in the local market without buying the edible oil from Malaysia or Indonesia or whatever, South America, and there is a price spike in the international market, then he is going to incur a big loss because he has to deliver at the predetermined price, and his purchase price is going to be much higher. So active management of price risk is extremely important for businesses that are exposed to these to the volatility of the prices. Now, let's take an example of origin prices. If Malaysia and Indonesia, let's say, increase the prices of palm oil because of demand and supply, then the Indian refiner should have a way to, if he has forward commitments, he should have a way to hedge himself. Likewise, foreign exchange. Now, if somebody has sold his product in rupee and has purchased his input raw materials in dollars, he's exposed to currency risk. And we have seen far too many times in the Indian commodity space that lack of discipline around currency hedging has meant huge losses to even large companies. So Forex is an extremely point that needs active management. Now, vessel daily hire. If you're buying a cargo of crude soybean oil from South America, you are exposed to international daily hires of these large vessels that will be 50, 60,000 tons. So you need to keep a track of what that cost is. Crude oil. Now, crude oil is a very large component of total freight cost, especially from, let's say, deep Western hemisphere into India. So that needs an active management as well. Interest rates. Now, interest rates are also extremely important because they have, they impact foreign exchange rates and get impacted by foreign exchange rates. And, that's interest rates, especially in India, maybe not in the recent past, but in the olden times, used to be between 10 and 15%, which was a large part of the conversion cost. So having good handle on what's happening to Indian interest rates and global interest rates is extremely important for an edible oil refiner. Now, on the face of it, you may think that an edible oil refiner, why is he exposed to crude oil risk, or why is he exposed to forex risk? Because his total import cost is made up of all these costs. Now, government tariff on import. Now, this is something that is probably not hedgeable so easily, because if the government changes the tariff just before the vessel is about to arrive, there is no mechanism of hedging it. So you are exposed to that risk. But idea is to be aware of the risks in commodity trading and hedge the ones which is efficiently and easily possible to hedge. Now, if you look at the last point where it talks about conversion cost input. Now, if it's an edible oil refinery, it's using a lot of chemicals and labor and packaging and transportation. Now, if the cost of transport domestically, let's say, goes up by 2% or 5%, it may not always be possible for the business to hedge that cost. So there are some risks that the business has to take unhedgeable, and there are some risks that can be hedged. So a very active identification of risks and selection of risks to be hedged is extremely important and is basically the core of commodity trading. And I'm sure the panelists after me will have many more examples, but really this is the commercial the commercial acumen of the traders will identify each of these risks and hedge them very actively for a profitable trade. Now, some of the commonly traded commodities in the world are, I'm sure this list is not new to anybody, like energy commodities, crude oil, gasoline, heating oil, natural gas. In the agri complex, you have grains and oilseeds, corn, soybean meal, soybean oil. We already talked about that. Wheat, livestock meats. This is also extremely popular, especially in the Western hemisphere in China. Metals, copper, gold, palladium, platinum, silver. These are also very actively traded commodities world over. In the soft commodity space, you've got cocoa, we talked about it, like chocolate, Coffee, we again talked about it earlier on beverages. Cotton, we again talked about it in what you're wearing. Orange juice, again part of beverage, and sugar, like sweets and chocolate. So these are all commodities that are large commodities world over, and are traded very actively on Indian and foreign exchanges. Then we again talked about lumber, like whether you're sitting on a wooden chair or a plastic chair, and dairy products. These are all traded at a very large volume on a global scale. Now, what is the role of a commodity trader? This is extremely important. I think some of the people, they relegate commodity trading to just a mechanical exercise of buying and selling. Apart from that mechanical exercise, there's a lot of value that a large, sophisticated commodity trader will give to its customers and suppliers. One of the most important things is time value. A commodity trader will make available seasonal goods all around the year. A commodity trader will provide just-in-time supply to businesses so that to reduce their working capital and reduce price risk. Now, the longer the time period, the longer is the price risk. So if you have something at your doorstep that you can buy today, process today, and sell tomorrow, then the total amount of time that you need to take that risk dramatically reduces, and reduces the entire risk profile of the business as well. So this is one of an important area of value that a commodity trader will add. The other significant value is place value. Now, if there is shortage in India for a particular product, and there is surplus of that product in the US, it doesn't help either of the parties. It doesn't help the people holding the goods, and it doesn't help the people who need the goods. So to have those goods at the right place, at the right time, is an important value which a commodity trader is able to provide. That provides goods at the doorstep of the processor or the consumer through a process of safe warehousing and transport. Apart from these two kind of core value that a commodity trader delivers, there are certain value-added services like hedging solutions. Now, in a lot of countries, a lot of consumers, they may not be very sophisticated in terms of futures and options and various other kind of structures which are available in the market. So a commodity trader, being of a specialized nature, can work very closely with buyers and sellers and provide hedging solutions that will add significant amount of value to them. Now, I have been in commodities for over 15 years and worked very, very closely with a lot of customers who don't understand futures and options, but they have a huge risk riding on it. So when you partner with people very closely, and when you understand their business and there's a certain amount of trust, a lot of value can be added between parties, and the risk profile of the business can be significantly reduced. Now, collateral management functions, these are now again value-added functions, not core functions of a commodity trader. Sustainability and traceability partners. Now, this is with all the compliances and sustainability mandates going on in the West and also in the East now, traders can become very valued partners to customers who want their products to be sustainable and traceable throughout the supply chain. For example, if there is a garment manufacturer in India who is supplying to a retailer in Europe, and they want to buy some, which is, let's say, called Better Cotton. There is an initiative for this, which is called a Better Cotton Initiative. And the retailers like an entire supply chain with transparency and traceability around it. A commodity trader can work very closely with these, let's say, garment manufacturers or spinning mills, and make sure that all the traceability documents are in order, and a sustainable product can move from end to end. This is one of the other areas which I think will be of a lot of interest to the audience. Now, what are the roles in a commodity trading company. So far, we've only talked about some of the commercial roles which are there in a commodity trading company. Now, commercial roles are only few, but then non-commercial roles are many in a commodity trading company. Now, in a commodity trading company, the uh, the entire process of trading involves fundamental research and technical research. So there's normally an analyst department who will do a lot of number crunching, a lot of weather studies, a lot of demand and supply related studies globally, and come up with what we call a balance sheet of that particular product all over the world. So a lot of and technical analysis is also extremely important, which basically talks about mass behavior. So there are in almost all commodity trading companies very important positions for analysts who will do fundamental and technical analysis. Then market research. Now this is a growing area with technology. The amount of data which is available today at everybody's disposal, and the amount of data which is being created every day is massive. With the penetration of internet at almost every nook and corner of the country, everybody seems to know everything. There's too much of information, but a lot of research needs to be done, and a lot of noise needs to be removed from the amount of data which is available. So the market research department really focuses on culling out credible information on which certain decisions can be made. Trading, we again talked about this already, that this is really the core of a trading company. This is a commercial kind of a commercial part of the business. It entails strategy, origination, marketing, and then whether you want to go into upstream and downstream processing. Execution. Now, to my mind, execution is the backbone of a trading company. You can buy and sell well, but unless you execute it properly, you're not going to make money. So execution is really the backbone of the business. And there are a lot of, and execution is a large department in most companies. People who are, from end to end, from the time you buy a commodity till the time you sell it, and the entire execution is between, is extremely important. Warehousing. Now, warehousing is an extremely important area. And
Manik, you are not audible.
Audible. He's audible.
Okay. So
you are audible, Manik. Please go ahead, please.
Okay. So warehousing is an extremely important area. And, my other panelist, Mr. Siraj Chaudhary, he is much more qualified to talk about warehousing than I am. So, but this is a growing need of India, and this is a very, very large space in itself today. Shipping and logistics.
You are not audible.
Am I not audible?
Audible to me, at least.
I can hear you.
We can hear you. You are audible.
Okay. So
प्रॉब्लम आपके एंड पे माथुर साहब प्लीज चेक कर लीजिए इनकी आवाज आ रहा है इट्स ओके
So shipping and logistics, again, one of the very, very key areas to focus on, and again, large departments in a commodity trading company. Finance. Now, finance is, as you would imagine, extremely important. Now, in finance, there are kind of sub-roles. There's a treasury function, there's an audit function, there's a risk management function, and these are all large departments as the business becomes complex and large. Legal and compliance. Now, this is another area of business that can no longer be relegated to being not important. This is an extremely important area with more and more integration happening between various countries, whether you talk about international taxation, legal compliance. It's an extremely important area. Sanctions. As large companies, we have to be extremely aware who you can trade with, who you cannot trade with, what currencies you can trade with. And then, of course, there's the admin and the HR function like in other companies. So I think I will stop here. I think I've been able to give a brief flavor of commodity trading and what the other parts of the business are. I will now pass on to our other panelist, Mr. Sanjeev Asthana, to take the next session.
Good afternoon to all, and thank you, Manik, for really laying the groundwork well for this session. And thank you to Mr. Mathur and LMA for doing something which is very close to our hearts about UP and Lucknow. So taking off from where Manik has left, and what I'm going to address now is that really what the role commodity plays. So it's all pervasive, that goes without a question. And as he's mentioned, that at a consumer level, at the impact at a corporate level and others is extremely important because it has everything, or largely whatever we sort of do and trade in and do business with. It does has an impact ultimately on what is criticality around the commodity, what Manik has explained. What I'm going to walk you through is, and with some examples, and why is commodities so all pervasive? What impact it has on multiple stakeholders? For example, when we look at the government, I'll give an example of that. We'll talk about the corporates, the companies as they operate. We'll talk about the whole issue around the supply chain management related matters. We'll speak about how it impacts directly the banks and insurance firms and the service providers, which is logistics firms, which is the documentation handling firms, and a whole range of other entities which get involved in the whole process. But most importantly, that why it's an important course which any MBA program or even otherwise any institution which is preparing the students to take on jobs or get into entrepreneurship or become an integral part to the whole economic continuum as this in the whole ecosystem of the economy, why it is important for them, because there's a tremendously exciting space and area which is less understood, barring some specialized institutions which have looked at it from an international business or otherwise. So let me begin that in terms of what do I mean by the ecosystem and why is it important. So first I'll pick up the corporates and give a couple of interesting examples as to why the companies which participate, which has direct vein into their businesses. So first thing is that almost all companies, whether we talk of petroleum companies, for example, Reliance, which used to be my erstwhile company, in the petroleum refining business, and I think Manik briefly spoke about the petrochemical business, the plastics, there is a direct impact on the profitability of how the commodity prices behave. So for example, when the petroleum, the crude prices were $142 a barrel, the ability of Reliance to make more money on that because it was a high priced commodity was significantly higher. The moment it comes down very low, then your possibility of converting crude into refined and then making that money gets challenged. But more important factor here is that at what price Reliance buys the crude oil and what price it sells the refined oil, and at what point of time both of them are getting handled, has a massive impact on the bottom line of that company, and in consequence to the the whole sort of shareholders return, the millions of shareholders what Reliance has, to the government revenues, and it has a huge impact on the P&L bottom line, simply because the market prices are moving at different points of time and have got different dimensions. I'll give another example, which a couple of years back I had very some sort of direct involvement. When, if you all remember, that there's a commodity called guar gum, which is grown in Rajasthan and Haryana, and the prices somehow went through the roof, and they went up really 2,000%. They went up in a matter of 2 months. Now it's a very unknown small commodity which nobody knew about, and this I'm talking the period was about 2012-13. In the US, there's an industry called shale gas industry, which is basically the oil drilling which happens in the US, especially in the Texas area, where they found a new methodology of doing horizontal drilling for oil, and they would extract that. But guar had a particular property which they used to blast it into the horizontal pipes. It would be mixed with water, and the petroleum, when it came out, guar was the element which was used effectively to do that. Now, because the petroleum prices were very bullish at that time, and the guar, which was supplied, and India is the 90% producer in the world, the guar prices went through the roof. The US entire petroleum industry. So if the portion of the guar in the overall petroleum thing was just, let's say, $50 million, it suddenly became $1 billion. And some of the largest companies in the world were impacted by the guar prices, which otherwise were a very, very small, minor portion of it. But then it became such a major portion because this was having a major impact on the prices of that. I'll give a lot of other examples. For example, in 2000, coming closer to agriculture business, that in 2008, 2009, the wheat prices worldwide went up. And one of the key impacts it had was that the durum wheat, which is grown in Madhya Pradesh, and while it is not exported, but because the prices were globally going up, there were riots in Italy and there were problems in Walmart in the US because the pasta could not be produced, and they call it pasta riots, what was happening. So to tell you, for example, whether we look at Nestle, we look at ITC, the prices of atta, prices of ultimately the milk-based products. If you look at sugar, which is a critical component for multiple industries and businesses, the core part is that the profit and loss of a company today, which has got any element of commodity, is very integrally involved with the ultimate balance sheet, how it is prepared, how it is delivered in terms of shareholders' return, and what can be done about it. So it has got a critical role to play as a commodities. The second one is the government. That we all know that government has basically 3-4 concerns when it talks about, and especially related to, one is that there should be a food security, which means that they should be able to buy enough and more of grains for distribution to the poor in the country through the PDS. Second, the government has that the control over the inflation, so that a country of 130 like a 1.3 billion people, we do need food which is contained in price. We need food which is the inflation is controlled, and the government has to ensure that the food inflation does not go beyond a particular level, which starts to hurt the poor and it starts to get managed. But how do you do that? So obviously the dynamics of supply and demand, which has a very large impact on how the food prices will behave, what kind of hedging can be done, how do you buy the produce, and is there anything happening which is getting either manipulated, but it becomes a very critical component in the overall supply chain as the government is setting up. So for example, that when we look at the purchase of the FCI, so if the prices in the commodity markets, in the open market, go higher than the minimum support price, FCI will find it very difficult to procure the commodities, and which in turn does not get distributed to the poor. So that is one major issue which is there. Similarly, you will find that issues around metals, around energy markets, whether I spoke about petroleum, but likewise, you have a big impact on the coal prices changes. We import a lot, we do a domestic business of coal. And if the coal prices go through the roof, then again, you have got high energy prices. Agriculture, financial markets. Financial markets are way more complex than commodity markets. But the point I'm trying to say is that the role I spoke about the corporates, why it is important for the bottom line to show profitability, to have predictability, and I'll come to a very core area of supply chains. Likewise, the government is critically involved in any movement of volatility in the prices of commodities. It is very, very interested to ensure, A, there is a stability, but more important is understanding why the prices are either going up or down, what factors are playing a role in that, and how that can be controlled. I'll talk about the supply chain, and I think it's a very important discussion because we all know, the China gets very often spoken about, that it's a part of the global supply chain route. So what does that mean, that China being part of the global supply chain, and how the commodity prices have a huge impact on how the supply chains are working? So one part is political, or maybe induced by this calamity of COVID-19, that I'm not discussing right now because that's not the subject of discussion. But the second part is that if there are multiple options around the commodities or from which country it can be bought, then the global supply chains get impacted very seriously if the understanding on the commodity prices are less evolved. So, for example, India is a big importer of edible oils. One of the examples, which is my current role as well. We can buy soybean oil from Argentina. We could buy from US. We could buy from Brazil, and so depending on how the internal dynamics of supply demand is playing out in these countries, the supply chain decisions around where to buy from, what is going to be the impact of that, what prices are going to rule and why they will rule, and choosing your origin smartly becomes very, very critical in the whole international supply management. But again, I don't want to talk only international. If you look at the domestic part of it, in the domestic play, whether it's the purchase of any of the commodities, let's say if the multiple states are supplying, so supply chain, whether how will the warehousing happen, what the logistics will be done, how will it get finally delivered, what quality is coming from which state, at what price it is getting delivered, do we want to buy or not buy? These are the day-to-day decisions anyone who's part of the commodity cycle, anyone who's part of the purchase decision, anyone in a company or otherwise is making his individual decision, they play a very critical role in how all these elements are determined. And I think that is very important part where the supply chains are getting impacted. I don't want to belabor the point too much because I want to speak about the other elements. But likewise, for example, the logistics are related to supply chain. The sea freight, how the ocean transportation works, which gets linked very directly to the sea freight and how the prices are evolving or otherwise. And I think that is having a big impact on how the supply chain management happens. And then I will give an example of how the, one core example which is relevant from Indian context, that India is a very large importer of raw cashew from Africa and many other countries. We process it back in India, have the processing done, and then we re-export a lot of the cashews. But likewise, Indians are exporting a lot of black pepper into different countries who then reprocess it and sell it outside. Castor oil, for example, India is the maybe again 80% producer of castor oil in the world. And we supply, then it has got applications in paint industry, in different industrial units, etc., worldwide, and it gets done. So the point I'm emphasizing is that whether it is supply chains, whether it is the securing, these stocks for the government, managing the food inflation, whether we're looking at markets in metals, or we're looking at energy markets or financial markets, or we're looking at areas like how the company profitability is impacted, as I mentioned about the petroleum industry in the US. But if tomorrow the prices of wheat and, or for example, rice were to go up, all the rice companies will have a challenge. Or if the rice company prices go down, then the profitability becomes high. But at the core of it, there is a decision making which is going on by somebody or a set of people or an entire department or a set of this one, which is into decision-making process to ensure the predictability of supplies, to ensure purchase at the right price, to ensure that it is coming of the right quality, and ensuring that it is getting integrated into the supply chain. So ultimately the companies are performing better and companies' balance sheets are better, there's a more profit, and they are able to do that. That is defining one element of that. But there is another very large part of it, and I'm sure that Siraj will talk about the employment and the entrepreneurship areas which will build up, is relating to that there's a very large ecosystem which has been built around the international business or commodity trading or risk management or any of these areas, which is around, there are law firms, for example, there are complex agreements being signed, contracts between buyer and seller. There are very, different companies which are into pure play servicing, the documentation support what they provide, the secretarial support which they provide. And then there are very emerging areas like, for example, the commodity trading is no more the traditional commodity trading of simple buying and selling at a price. Now you've got two added elements which have been involved in that. So, for example, there's a hedging at the futures exchange. That how can you hedge your price risk, how the price discovery happens, and which makes it very interesting that while you are exposed to the price risk in a commodity play, but you can also hedge your risk, which means that you need to have an understanding of how the fixed price market, physical markets are working, but also how the futures market are working, and how can you manage and expose your exposure on the price risk that you can give either a better profitability, or you can bring down your cost of raw material which goes into the end product. And that is again is a very complex and very large area where people have spent their lifetimes learning about it, building it up, making enormous amounts of money, and that is evolving into a very technology-driven orientation, which people have acquired, companies acquired, and I'm coming to that bit. Now, as the data is becoming important, whether it's a global data, how the data analytics are playing a role into this whole play of commodities, whether it's the pricing, the trading, the decisions around supply chain, how the predictive modeling are working. And now we are seeing that new algorithms are getting discovered that to how do you predict the price of a commodity, 15 days down the line, 30 days down the line, 3 months down the line, or for next year also. And there is enormous number of data firms. Now, you've got these hedge funds which have got their data platforms, which are building it up. You've got technology companies which are supplying, this data and information as software as a service on the SaaS model. We've got, the businesses and individuals who built up model. There are full companies which have come up, which are going into advisory orientation. There are consulting firms which are giving, the advisory on data, on futures, on analytics, on algorithm built up. And similarly, the last part of my presentation relates to the banks and insurance firms that, and I think that was briefly discussed in the first presentation, that the banks are critically involved in that. And that's why banks have started hiring a lot of professionals who've got a deep commodity insight. Because as you know, businesses work on loans and big debt. And banks have an exposure to companies which have got massive exposure to commodity prices. So banks have a serious interest in how the commodity prices are moving and how to manage, whether companies are managing their exposure well. Similarly, in the agriculture system, the weather markets have become very important. That in the weather predictive modeling, how the insurance products are getting priced. So, for example, if the weather is very unpredictable, the insurance cost will go up. If the weather is more predicted, the insurance cost will come down. And that is getting priced on a regular basis. Then there are reinsurers, and then there are reinsurers. We've got issues like Export Credit Guarantee Corporation, ECG Corporation in India, that how do you manage the credit risk, etc. Foreign exchange, interest rates. So there are a whole lot of areas in the financial markets which have got a very critical role to play in how the commodity piece is working. So to wrap up my presentation is that why commodities are important, why should it be taught? So Manik rolled out the perspective on commodities, that really what commodity markets are, and how do you understand commodities. What I have spoken in last 13-14 minutes is how is it impacting specific companies, that why government is interested in commodities, why companies are interested in commodities, and how it is impacting their performance. Why is it important that futures market for hedging and price discovery and options are important? How commodity prices are impacting supply chains and building up greater predictability and how these are managed. How very large services companies, right from law firms to secretarial services to how the whole data part of it has emerged, the big data of analytics, the algorithms, the IT companies, the entire play which has started emerging. And then we spoke about the financial markets as to how and we spoke about the global value chains, the domestic value chains, how the commodity prices are having an impact in how things get exported and re-exported, how things change and how they move forward. And then we spoke about the interest and otherwise, and what impact it has on the balance sheets, on the pricing and otherwise. So I'm going to close my presentation with only 2 points. A, understanding of commodities either as an elective or as a full-fledged course has become very critical, and most of the MBA courses are, while touching it as a topic, but the focus has not been strong enough, which is creating and making sure that their candidates are enabled to go and acquire good jobs, build up their careers in the commodity companies or even non-commodity companies as supply chain managers and price managers, and build up their great careers. And likewise, entrepreneurs will have an opportunity to really do that. And now I'm going to pass on the baton to Siraj and in terms of explaining the opportunities on the front of entrepreneurship, jobs, and otherwise, how these companies would make a best case use of it. Siraj, on to you. Thank you.
Thank you, Sanjeev. And, sorry, someone else was speaking. Thank you, Sanjeev and Manik for making my job easier. Wish to thank LMA for organizing this. Always a pleasure to be associated with any activity conducted by LMA. And as the speakers before me have said, all of us hailing from Lucknow makes it extra special for us to be connecting back to our homeland, so to say. And always a pleasure to be making a contribution in the city or to the state where we all come from, and has had a big role in our being where we are. Talking about commodity trading specifically, if we look at the traditional MBA courses, they all have specialization in sales, finance, HR, operations. So why did commodity trading not become a specialization so far? And because when all these courses are being designed, I'm sure thought would have been given in terms of where to create the specialization. And the specializations have typically been created based on the market needs, so roles that were available, where the jobs were available. And therefore, most institutions have specializations in these courses. What you would notice is that what is common between the three of us who are presenting to you today, that we come from one particular management institute, which actually had this, or at least elements of this in their curriculum. And therefore, all three of us, and there are more people like us from different parts of the country, who have actually had the advantage of getting educated in a space which was fairly unique. And I would say that, this is maybe a little bit of self-praise here, but it is quite a coincidence, or may not be such a coincidence actually, to see the fact that all three of us actually went on to lead our organizations at a fairly young age. And which does tell you that this part of the education that is common to us somewhere enabled us to, grow our careers faster than they have for people in some of the other courses. Not to say that people in other spaces haven't grown, but this is something uniquely common to all of us. So what has changed? Why is commodity trading or risk management suddenly important? If I step back and look at the history of businesses, most businesses have been set up by individuals or families. And therefore, the critical decisions of buying the inputs were always with the members of the family. And that tells you how important that decision was. Even the largest of global corporations originally started off as family companies and family businesses, which where the key decision making still lay with the owners or the members of owners' families. And as these companies grew bigger and expanded globally, they deployed professionals who were then expected to do the job of buying and selling as well and as efficiently as the owners could do. And for that, the owners needed to trust them. And that is where the element of professionals coming into the space of commodity trading started in the global corporations. And now if we look around ourselves in the businesses and the industry in India, a lot more professionals have stepped into this space. Now, and that actually gives rise to the need to create a course or a curriculum that trains people to essentially become commodity traders or risk management specialists. And that is where we see the opportunity emerging for jobs for people who have undertaken this course, because it actually makes them eligible for a lot more roles than may have been originally envisaged, which is saying that, okay, in the beginning, one may have thought that, okay, if you do commodity trading and risk management, you could hope to get a job in one of the large commodity companies, which were very few and obviously global. So there was limited scope for these roles. But as I will share with you going forward, that scope has enlarged significantly. And today the opportunity for a commodity trading knowing individual is significantly higher. And as Manik shared with us, if you look at every product or every consumable sort of product or thing of value does have an element of commodity in it. And that is where the role of an educated, a trained commodity trading professional comes in. And if we look around us, there will be a number of roles that I see where a commodity trading professional or a commodity trading aware professional has a role to play. What I've also seen is that what commodity trading actually brings into you, apart from, Manik has beautifully laid out the whole element of the supply chain from origination to the various other activities, regulatory, foreign exchange, warehousing. These are all part of the supply chain. And therefore, a commodity trading professional has the opportunity to fit into a supply chain. While he's buying, he's part of that very critical supply chain, which enables the goods to move from being a shapeless, undifferentiated commodity to a fine product in the end. And how that job is done has a significant bearing on the profitability of any business that is engaging in such an activity. And going forward, I see more and more of this opportunity coming up for the simple reason that today, in a world which is extremely competitive, we moved away from having 2, 3, 5 suppliers, recognized large-scale suppliers of a particular commodity or a particular product, to now having more players involved in it. The competition has increased, the margins are coming under pressure, and that is where the cost of supply chain or the efficiency of supply chain comes into play. And obviously, as companies grow bigger, it is no longer possible for just the proprietors or the owners to manage that role, and therefore the need for professionals goes up. What I've also learned in all these years is that this awareness of commodity trading actually inculcates in the professional an ability to assess the risk and rewards of his actions or her actions, which is a skill set which is useful in every sphere of life. So to be a successful businessman, to be an entrepreneur of your own, the ability to assess risk and reward, which is something which is very essential to commodity trading, is paramount in making or creating a successful business. A lot of failures of business that we've seen is simply because people have not been able to sort of put together the risks they were taking, whether they were commensurate to the rewards that they were playing for. And I think that is an activity that commodity trading professionals learn very well. And all of us have learned it while doing our jobs. We started fairly young. But I think that's something which is inherent to commodity trading, or a role that involves commodity trading. So which are the areas that you could be looking for? Today, whether it is a company that manufactures cars, because that involves steel and various plastic products, and they are all commodities to begin with. It requires people who understand that market movement, the ability to price right, to the ability to find the right sources. So you need commodity trading aware professionals to be running that supply chain. So cars being more sophisticated, you move to even someone wanting to sell packaged data. You require that commodity awareness. So any large company which is today aspiring to sell food into the Indian market will need commodity trading aware professionals. Now, there is one class which is what I would call the commodity traders, which actually exist in a lot of companies that are trading commodities as their basic business. So all of us, Manik, Sanjeev, and I have been part of those organizations. Manik still leads one of them, but Sanjeev and I have kind of moved on to do different things. But that learning has stayed with us and remains an integral part of our decision making even today. So you have the opportunity to be a commodity trader and be part of a commodity trading company. You also have an opportunity to become a commodity trader and trade for yourself. 30 years ago, now I would say 40 years ago, who would have thought that stock market trading in India would be so prevalent? But over the years, people have actually found that as a self-employment activity where people have built their awareness about stock trading, and made a sort of career, or made it a job, or made it a self-employed occupation. And that's the same opportunity that exists in the commodity trading space. So self-employment, either as a trader or as someone who's actually helping others to trade, is an opportunity that exists. It is still not as mature in India as it is in some other parts of the world where the exchange trading is much larger. But if we go by the intent of the government and some of the recent sort of ordinances that have come out, and especially in the agriculture space, I expect that going forward, the opportunity for trading commodities on exchange would be an opportunity for people to take that up as a career. And this is important also because now, when we are sort of at least attempting to, and that's the stated intent of the government, and I think that's the right solution for Indian agriculture, where we are creating this farmer producer organizations, which is actually aggregating the farmers produce and helping them to trade better, to get better prices. Role of commodity traders will actually be required in helping these organizations to market and price their outputs better. So that's a space that is an emerging opportunity that I see. Every food company, every product company which has an element of commodity in its input, some of them, we've talked a lot about edible oils, where 90% of the product value actually it comprises of the raw material cost. And therefore getting it right is critical to the success of the organization. And this is true for, I mean, you take an Hindustan Lever, you take a Nestle, and I'm talking about some of the best corporations in the world which have large presence in India. They have to be, or whether it is a Coca-Cola or a Pepsi, I mean, or Dabur, each of them have to be very sharp in their raw material procurement. And that requires a good understanding of the movement of prices and all the elements that Manik talked about in terms of awareness of factors that influence the movement of prices. And that understanding and that education, when imparted through a course, prepares professionals much ahead of the game, rather than being put in a position as a purchase manager or whatever, which is typically how these roles were originally performed, where people actually had to learn on the job. But today, through proper education, we have an opportunity to bring out professionals who are ready for those roles and have are prepared with the ability to make a difference and make an impact on the company's profitability right from the word go. Another area where this is becoming important is also the consulting business, because a lot of companies and the government are calling upon these consulting firms to actually advise them on how to prepare or predict or manage the supply chain, the supply and demand equations for a lot of categories. And that includes, while very often when we talk about commodities, we kind of at the back of our mind talk about agriculture commodities, but this is as important for textiles as it is for automobiles, as it is for a lot of, basic thing is, coal and some of the more, fundamental inputs that go into any element of the economy, from infrastructure to FMCG to, the white goods. There is a need for that role in each of these sectors. So I think we have arrived at a time where the role of a commodity trading and risk management professional is now essential to all organizations. Whether they are having access to those people is not yet there. I mean, today, frankly speaking, if each company really has to raise their hand and say that we've got trained professionals, the answer will not necessarily be a yes. Most organizations have learned to manage that role. They have placed their finance people in those roles. They have placed their operations people in that role. And those people have, over a period of time, learned the trade. But as we grow as a new industry, the new age industry is coming in, where with a lot of technology, this role will actually gain more credence. One of the reasons for that is that an important element of commodity trading is really access to information. In the past, 10 years ago, 15, 20 years ago, this information was the preserve of a few companies. And therefore, these companies had the opportunity to direct how the market or the prices in the market would move. Today, information has become universally available. technology has enabled transmission of this information to anybody who needs it, and that allows more people to become better traders without having the need to work for some of the large or the more sophisticated trading companies to become good procurement managers, good traders, and good advisors for the various consulting firms. So now it is important for us to get this whole skill set that we've talked about, all three of us have talked about. How do we make it into a course that can be introduced in a curriculum? And I think that is where our challenge lies, because if this has not been a historical course, where do you find the educators? Where do you find the real life experiences for people to learn from? And I think I will hand it back to Manik now to take this up. All three of us were fortunate to go to an institute, as I rightly mentioned, which actually touched upon a lot of elements of commodity trading, or actually the commodity supply chain, the various elements of it, though not necessarily the skill of trading. That is something which what would be needed is a lot more practical insights and exposure to some real life situations, but that we will come to. But for the moment, I will hand it back to Manik to share with us, and we could be engaging in a question and answer session to address this area of how do we create a curriculum and how do we create that batch of educators who can carry this curriculum to the aspiring students to help them create another sort of line of career, so to say. And that is perhaps the objective of this seminar too. And it'll be great if we are able to impact that direction. Over to you, Manik.
Thanks, Siraj. So I will now go towards the final part of the presentation. Let me just share it again. Sorry, 1 second. Am I audible to everybody?
Yes, please.
Okay, thank you. So the course objectives. Now, this has been circulated already in advance, but on all the things that all of us talked about, the key objective of this program would be to provide learning in areas where the individual can either set up his or her own commodity trading business or work in a commodity trading company, which can be active both in the domestic as well as the international sector. The course will aim to provide understanding of global agriculture, energy, and metal ecosystems. Now, these are kind of three broad areas where most of the global commodity trading happens. Apart from just being focused on commodity trading, I think the course will also allow to build capabilities needed to work in any industry supply chain function. So Siraj talked about the automobile industry. And if you all recall, I talked about execution, shipping and logistics, finance, treasury, compliance, legal. So all those are areas that can be used across supply chain companies. So it can be used in a company like HUL or Dabur or Nestle, or an automobile company as well. So this is an extremely important point, because like I mentioned that if there are 10 roles in a commodity trading company, only 2 or 3 are core kind of commercial roles, and a lot of the others are basically kind of enabling functions to the core. One of the other important ideas, objectives of the course would be to develop an appreciation of the interconnectedness of the world. And I think we already talked about it, that how changes in one part, like seemingly unconnected, can have significant impact on the other. And I think this current coronavirus is, one glaring example of to show how our world is interconnected. And the other is also about regional trade associations and World Trade Organization, basically preferential trading systems. Now, this is an extremely important area in today's time, where even in India, the talk of the government is about Atmanirbhar Gupta. And when you look at this spat between US and China, it's all about kind of preserving their, being less and less dependent on other countries, moving manufacturing back to their bases. So free trade agreements will become increasingly more and more important, the understanding of those going forward. One of the other objectives of the course would be to provide learning for technical analysis, which can be used in financial markets. Again, I refer back to my earlier slide where I said that one of the key positions in any commodity trading company is that of an analyst, which is both technical analyst and fundamental analyst. And as Siraj mentioned that, there is a lot of overlap between arriving at a price discovery model for a securities business like share trading as well as commodities. So people who go through this course don't only have to focus on commodity markets, they can also look at financial markets where technical analysis will be of good use for them. In terms of the course outline, now what we thought was that there are two areas which can broadly classify on the courses. One is the foundation courses. Now, these are courses that are, enabling courses in a commodity trading company. Let's say talked about, financial derivatives and risk management, data analytics, global trade, WTO, global compliance. So these are all enabling courses, and they are also cornerstones of very important areas in commodity trading business. The other are kind of the core trade courses. Now, the core trade courses, I've named 4 of these courses based on some of the existing programs. One is Principles of Commodity Trading, which would mainly talk about the 2 approaches of fundamental analysis and technical analysis. The second part is commodity trading and price risk management. I think enough has been talked about why price risk management is so important for improving the bottom line and reducing the risk profile of the business, or basically managing that risk much better. International trade for trade logistics, for international business, extremely important. One of the key areas that basically adds time and place value to a commodity. Trade operations and documentation. Again, like I said, execution is the backbone of a commodity trading company, and operations and documentation is a key part of execution. So these are 4 core courses for a commodity trading company, very specific to commodity trading. On the other, foundational courses which have application to non-commodity industries as well, and those are financial derivatives and risk management, futures, options, OTC products, financial management, just in terms of, how a company can raise money. If you're looking at a new M&A transactions, what are the profitability metrics that you should be looking at? Something like, NPV, IRR, some of the financial indicators. Data analytics, I think, Siraj and Sanjeev both talked about that, this is now a key differentiator amongst companies, how quickly they are able to extract information from numbers, from data. Global trade and export analysis framework. Now, if somebody is starting an export business or a trading business, it may seem, very difficult to understand, where you sell, how much you sell, what price you sell. So there is a full export analysis framework in place, which one needs to study. WTO, the Indian perspective. Now, WTO is again an area which is gaining a lot of importance, especially with regard to agriculture. India has a lot of cases with other countries with regard to various subsidies, and that in the end also decides on the direction in which the country as a whole is thinking on what should be the mechanism of providing subsidy and incentive to the domestic industry, which is WTO compliant. Global compliance, again, I think I talked about earlier in my presentation that compliance is a very, very integral and integrated part of any international business, with the amount of screening there is on counterparties, on banks, etc. So global compliance is an extremely important and evolving area, international taxation as well. So in terms of our kind of recommendation and a proposed program, again, there are a lot of colleges. I believe, all the colleges already have a full-fledged MBA curriculum. Now, I believe that some of these courses that we have listed out may already be there in the program. So we have proposed two programs, one in which the foundation courses are already there. There, maybe the institute can look at having a minors program in commodity trading, where it only focuses on the 4 core subjects that we talked about. It can be a 20 to a 30-hour program for each subject. With that amount of time, I think only a basic understanding of concepts will be there, albeit, appreciation and, thorough understanding. It's, one needs to actually do several field visits to custom house, ports, warehouses, to really see the, really how things move on the ground. So I think if the foundational courses are already part of the program, then just the core courses of commodities trading between 20 to 40 hours or 30 hours can be put together, and they can be just made part of one semester. And anybody who does that program would, let's say, be eligible to be called having done a minor program in commodities trading. The second suggestion is to have a much more rigorous and complete program, which is not only focusing on commodity trading, but also on supply chain as a whole, where there will be 10 core and foundational courses. Of course, each institute, depending on the programs that they have, can tailor those individual courses. But the idea is to have all the different areas, something which I talked about in my earlier section of the presentation, to have a thorough understanding of those subjects. The idea for the program would be to provide an in-depth understanding of concepts, which will come through field visits to customs house, ports, warehouses. There should be an opportunity for industry live projects. Now, I think as Siraj mentioned that with some of the ordinances that have recently been announced, the agriculture sector, and since we're talking about agriculture, since 3 of us are from the field of agriculture commodity trading, there is opportunity for a lot of live projects in the industry. As companies that we are progressively looking at investing and adding new products to our portfolio, there will always be live projects that companies like ourselves and other companies can give to students. Industry internship is also one of the areas where students can spend a few weeks in an office, hone some of their other commodity trading concepts by talking to people who are doing this day and night. And I think that will be a really good opportunity for really making up one's mind, where that person's heart lies. And I think this can be extremely useful. Other ways of engaging the students would be by having simulation and trading games. There can be regular industry interactions, where industry experts from different commodities, different areas can come over and talk to the students, and give them much more real life sort of linkage to what they're actually studying in the classrooms. And the last, which is extremely important for all the students and faculties and the institute, is industry placement. I have to say that every time that we want to look for people who have some sort of training on commodities trading, there are very, very few areas, very few institutes that we can go to. So with the opening of the economy, with a lot of changes which is happening in commodity trading in general, I think there will be a lot of demand for people who have gone through these formal trainings. Before I, move to question and answers, I would like to give the floor back to Sanjeev, who has been a faculty at the Indian Institute of Foreign Trade for many years, and was also one of my professors back in 2004. So may I request Sanjeev, if you can, if you'd like to add anything on the course content and the proposed program.
Thanks, Manik. And so I was a professor, but that was long back. And I took for a couple of years the electives. I'm not a regular professor, but yes, I did. And I just discovered yesterday that Manik was also a student at that time when I sort of taught at IFT. I will not take much time, just quick 2 minutes. I think the way Manik has laid this down, I think sets the template and a platform for the MBA courses, universities and colleges to take this up as a specialization for a shorter version, or take it as a longer version, which will set them up either as a certification course or as a part of the rest of the bridge courses being done and taken up as a full-fledged course. Siraj has beautifully laid out the opportunities across the spectrum, both as an employment as well as entrepreneurship. And at IFT, because I was the first one who kind of this thing started, and they reached out to me to kind of set this up. So I have that experience of commodity trading and price risk management. And it was, some, you can vouch for it, the students loved it. So I almost had a 90% people opting that as an elective, or 95%. And it was one of the best courses, at that time, because students found it interesting. It led them to superior careers. In fact, a lot of people made a choice to join trading companies, post their learning about the commodities, and their interest was aroused. So I would say with the job market the way it is, the opportunities, the way economy is opening up, and the way things are laid out in front of us, I think there's a huge opportunity for the colleges to look at commodity trading or international business or trading per se, and really sort of impart that in the way Manik has laid out. We could further sort of support and help with that. But there's a great opportunity. And I think today's biggest issue is employment. And there is a serious gap. So, the supply and demand between the trained professionals to take up the roles which are opening up, I think if that matchmaking will happen through trained people coming out of this university system, there is a tremendous opportunity available to students to take on meaningful roles, and companies to hire good students from UP, and that's a very major interest we have, that trained good people will get out to the job market. So now we're open for any Q&As, which is there, any burning questions people may have. Thank you.
There's some problem with Mathur sir.
Yeah, his video is not there. I think also there are, I think some questions which.
Yeah, some questions are there. Yes. On
the chat box. So I think Dr. Ansari has asked 2 questions. So if that can be addressed, or somebody has earlier asked about FX. So FX is foreign exchange. I think most people know, but from the student community or somebody asked. So anything specific, anybody has any question, you may just raise.
Praveen, can you open the chat box and read Dr. Ansari's question? I'm unable to.
Yeah. So, this is about MSMEs he has asked actually.
No, the first one is different. There are 4 questions.
Okay, let me just go up then. I think I can only see 2. Yeah.
Actually, you are seeing the chat box has the queries, not the Q&A part.
So, yeah, that's right. So there are some question in Q&A also. I can see. Give me example of Anil Kandari has asked. Give me examples of hedging solutions. Why is commodity market an attractive investment? And then third question from Imran Siddiqui is what is hedging and speculating in commodity trading? So if somebody can address that, I think.
Take one question at a time, otherwise.
Okay, so start with hedging and speculating in commodity. Somebody is asking.
Manik, you can take that.
Manik, you can.
So hedging in terms of,
What is the question?
am I audible?
Yes.
Yeah, you're audible. Yeah.
So in terms of hedging tools available, there are multiple hedging tools available. Some are exchange-based and some are non-exchange-based. For example, there are futures that we talked about. There are options that we talked about. In the non-exchange space, there are forward contracts that one can enter into to take away the price risk from the commodity. So, I mean, there are more, there are various what they call over-the-counter products that are available where you can go to a bank and they can structure something specific as per your needs and requirements. So there is a whole body of sort of knowledge available on hedging solutions. The most widely used are futures, options, and forward contracts.
So, I think what you have addressed is about hedging tools and all. I think what the person is actually asking is about basic thing about speculating. So he's mixing speculating and hedging. So I'm sure that is something which is very basic, but you can just answer that also.
Hedging is basically, Sanjeev, do you want to take the question or?
I think, see, the hedging is basically when you have a price exposure that you've purchased, you want to minimize your risk and mitigate your risk. For that, you need to take a counter position. So suppose you've purchased a commodity, then you want to sell it at a futures exchange, or you could look at selling it in a deferred period or whatever. That's called hedging, which you are minimizing the risk. The speculation is that you want to invest in a commodity or trade in a commodity with an intent to make profit around that, which means that you're taking it's a total, you could lose a lot of money or you could make a lot of money. And so there is a lot of speculative funds, which I mentioned about hedge funds, etc., which are there, which have made it a business to make money out of both hedging as well as speculation. But speculation is basically with an intent to make serious amount of money by participating in the commodity markets, by either going short, by selling in advance, or buying beforehand to go long in the position.
That answers the question. So another question from Mr. Purushottam is that could you please suggest any similar courses available online?
Manik, you would.
I'm honestly not aware.
So what I know actually from NISM has these courses on commodity derivatives and trading, because we deal with that and we are doing program with NISM also. So NISM, you can go on NISM site and National Institute of Security Markets. So there you find some courses which are certificate courses on commodities. So you can do that.
Thank you.
So then we come to the question from Dr. Ansari, if he's there. I don't know, because what I can see is two questions only. Raise in the financial upper limits of MSMEs. Opportunities are likely to be siphoned off by big fish, depriving the real MSMEs. Your take? So this is, I think, about the definition of the MSME being changed. So I don't think maybe anybody wants to take that. Otherwise, second question is, why is it processing facilities of perishables are very low, both in India and especially in UP? Will abolition of EC Act weaken the PDS? If Mr. Siraj wants to take that.
Yes. So the reason why perishables are not processed is directly linked to how, as a country, we consume food. We are actually not like the West where food is, processed and brought to home. Our tendency is to consume fresh fruits, vegetables, meat. I mean, in the rest of the world, meat is bought in a sort of frozen cut or packed form. In India, we still have the largest wet market. Our fruits and vegetables we are buying from the streets. So there is the opportunity to process actually comes from what the market wants to buy. And there is obviously the consumer preferences to buy everything fresh. I mean, we still have a tendency to go to the sabzi mandi every day to buy our produce. We still have a tendency of a milkman coming and delivering a packet of milk every day, unlike the West where people go and shop for a week for their grocery or whatever. So the need for processing is low purely because the consumer behavior drives that. At a time when India starts consuming more packaged food, you will see more processing facilities or processing industry coming up. And we have seen that change. Today, when you see a rising number of biscuit consumption, you see the growth in the biscuit companies, or you see noodles, or you see pasta. I mean, whichever processed foods which are gaining consumer acceptance are seeing more processing facilities and capacities coming up in them.
So thank you. I think another question has just come in. When did commodity trading start and how? So this is history of commodities.
See, commodity trading has been there from the origin of, in fact, if there was any trade to begin with, I would call it, it was commodity trading because, I mean, even from the times, ancient times of barter, when people were trading, whether it was, food or grain for something else, there was always a commodity trading. I mean, everything is a commodity when it starts. So I think from the time trade started or the history of trade, commodity trading has been a part of that.
So thank you. I don't find any other further questions, so we can move ahead if.
I think we have not taken up Ansari Saab's question. I would suggest that you invite him, unmute himself, and let him ask himself. Because from my chat box, somehow those questions have disappeared. There were
so another, yeah, I can now see one more question, which is about: do you recommend any change in government policies to encourage?
That was the one. Yeah, I was.
Strengthening supply chain, especially for potato, milk, buffalo meat in UP or India.
See, the policy really is not holding anything back. Today, when we look at how, all these commodities are being traded, or not necessarily commodities, I would say, for all of them, particularly buffalo meat, it is really about the users strengthening the supply chain. I mean, for potato, of course, it is a commodity. UP has a large stake in it. And it is also a commodity which is actually increasingly finding itself in use for processing. So companies that are using potato are stepping in, bringing in the commercial varieties, and therefore that supply chain, to the extent that potatoes are getting linked to the food processing industry, is being built by the organization. So whether it, I mean, all the potato chips making companies are setting up their supply chains, and that will have a benefit for the potato farmer in the country. Same for milk. I mean, that is established supply chain through the cooperative, and milk, in fact, is the highest processed commodity in the country. Most other, India has a very low share of processed food in most of the sort of categories. Milk at about 30-35% is the highest. And obviously, there is a huge scope for improving that supply chain, which really comes from bringing out the small farmers who today are really not strong enough to become a bargaining power in themselves. And that aggregation of farmers through the private sector or the cooperatives will help improve that supply chain. But I do not see too many options or too many openings in the government space in terms of the regulatory space to make this make a significant difference. I think a lot of that platform has already been laid, and it is for the industry to walk the path. Buffalo meat, of course, has its own challenges, where in the recent past we've had a situation where there have been various restrictions put on capacity usage of these slaughtering companies and movement of meet. I mean, this is India's one of the largest export opportunities, which we need to be using well. It is good for the dairy industry as well as for generating employment as well as trade surplus. But this has more connotations than just pure trade, and those need to be addressed. So it's rather than the policy, it is the ideology that needs to be supporting this.
Thank you. I think we can...
Unless there are more questions, we can invite True Vice Chancellor Mr. Vineet Kansal for his input.
Yeah, thank you so much, all the panelists. This is a wonderful program. It was an eye-opener for everybody, I'm sure, because it was an eye-opener for me too. I could see the basics, which have been very well laid down by Manikji. He actually took the session like a teacher and start, focusing and making it understand, what are the commodity to start with. Though we have circulated in a detailed, apart from the Vice Chancellor's circular, all the written material regarding this and what could be the possible courses has gone to the, our colleges, 800 colleges, which have been the part and parcel of our journey as an affiliating colleges. So I'm sure they have gone through it. The interested people have joined it through as a participant and through other forums of it. I'm really delighted to have such kind of session, and I think we have such more sessions. There are a few things which I was wondering. I am sure we should look the site of National Institute of Security Management site and what are the courses available, because in the time which we are in this pandemic time, when everything is closed, MOOCs-based learning is an important thing. So if we can see and suggest this site, even through LMA or to me, even writing an email, we can share with our institutions and to the faculty and to the students to explore those courses and to do those courses and expose them and being benefited by those courses if some contents are available. At the same time, I find it very, very interesting, and I was looking forward and I was wondering, how we can groom our faculty members into this area, because to me, it sounds to be more practical oriented and, practical based oriented things, which has an amalgamation of artificial intelligence techniques, algorithm techniques, which needs to be imbibed upon and to understand those techniques, and to your common sense and awareness, which comes from the market in the different sense. So that needs to be seen how we aware our faculty members into it. Second thing is, though it was being said by Manikji, he is open to take up some students training internship part. But in general, the internship opportunities are not very many. And because of that, our students are not being exposed to the practical aspect. How do we improve upon, the practical or internship opportunities or the project internship opportunities for our students who are interested? Is there any forum to whom we can share and the interested students can be, either selected or given an opportunity, or some work is being given and then they are being shortlisted based on their zeal, passion, devotion, dedication, extended to. If that mechanism can be developed, that is my, there are only two questions which I have from my side, and I extend very, very sincere thanks to all the panelists, and I am sure the people who have joined it and listened it very carefully would be benefited out of it, and we would like to extend our full support to this endeavor, and the way our management professionals or even engineering professionals or the professionals of any trade who would like to make an expertise into this area and would like to fertilize them into the, with multidisciplinary knowledge and out of their passion, out of their instinct, they would like to groom and develop in this area, we can help them to do so. So thank you very much once again. And I look forward, the two things, how do we groom our faculty and students, and how do we take up, internship and the project training for the students who are interested in. Thank you very much. Thank you.
Thank you, sir. I think before although we are exceeding the time limit, but before I formally give a vote of thanks, I would like to just take a couple of minutes to share my experience about the area which we discussed today at length, and I think with the veterans of the subject. So, what we have been doing at our organization, which is Evoke India, what we have done is that we have been spreading some amount of awareness about commodities. And in fact, recently we had a program with SEBI and with MCX. And there it was a program for Indian Industries Association on the base metals, how the trading in the base metals and how industry can benefit. And unfortunately, there were not too many members who could attend. But after the program, people who attended from the industry, they were so much, happy to understand that how much money can they save by just doing the hedging and understanding about the commodities part of the business. Because a lot of them are using a lot of metals, whether it is aluminum or zinc or nickel, whatever. So whether it's transformer industry or any. So similarly, we have, what we are seeing is that there is, and some of the industry members actually came back to us and asked that, do we have any good consultant here? As Mr. Siraj was saying, that there is a need for a lot of consultants or traders, who are experts in the field, and if we can take their help. So that is something which I have found, that there is a huge gap which exists here. And if that can be addressed with a full-fledged course for the people, because we have had certain interactions with people from the trading community, like somebody who are into the commodities trading in UP. There are a couple of big shorts who are there, and they are doing very good trading on, especially in the precious metals, in the gold and silver. Today, the gold is going up, such a huge rally happening, and everybody is attracted towards it. So some people are making money also by trading in gold through the commodities markets. Now, there also the need for a good trader who can actually address. Similarly, we did a program in Sitapur for one of the FPO, a farmer producer organization. There also, in terms of their understanding, and they need they are really in need of some good youngsters who can really help them. And which is where I think this kind of a course and a degree or a certificate will come very handy if you could prepare people. And the best part is that here we have the practitioners also who are involved in that process, and that is where if the students can get job, on the job training or learning, which is generally missing. We get a lot of people who come to us with certificates, which is there for the course which they have done. But if you ask the practical side of it, it is completely missing, and which is where I think the need is very much there, that something like this can be institutionalized here. Now, I would formally actually give my vote of thanks to Mr. Manik for conceptualizing the whole of this, along with Lucknow Management Association. Mr. Mathur had conceived this idea, and along with certain faculty members. So thanks a lot, Mr. Manik, for actually making this effort and putting this all together and sharing with all of us. I'm sure we all feel immensely benefited by this construct of the program which you have designed. Mr. Sanjeev Asthana, your thoughts, in terms of how this can impact the bottom line of the companies and how it can help the students get the employability. That's something which is a very, very important aspect to the whole concept which we are bringing in. That will, I think, really help. So especially in financial markets, actually, a lot of things you talked about. I have been into banking and for last about 23 years, and I have seen that insurance, banking, everywhere the need of the people into commodities is very high, but there's a dearth of people. So thanks a lot, Mr. Asthana, for I think putting up your comments and giving such a in-depth analysis of the sector. Mr. Siraj Chaudhary, I think we really missed your Hindi, sir. Last time मुझे लगता है जो हिंदी में आपने तो ज्ञान दिया था बहुत अच्छा लगा था मुझे, और मुझे लगता है कि वो भी एक एस्पेक्ट है जो हम लोगों को ध्यान में रखना पड़ेगा, क्योंकि मैंने देखा है कि अभी जो हमारा कार्यक्रम हुआ वो हमने MCX में किया, और जो लेडी बॉम्बे से जिन्होंने एड्रेस किया उसको आपको बताऊं मैं, व्हेन आई अप्रिशिएटेड हिंदी, मैंने कहा कि आपने जितना हिंदी में अच्छा बोला और जितना अच्छा लोगों को समझ में आया, तो उन्होंने बोला प्रवीण जी मैंने 1 घंटे तैयारी की थी पूरी हिंदी में करने की, बिकॉज आपको मेटल्स और वायदा कारोबार के बारे में हिंदी में बात करना बहुत मुश्किल होता है. तो मुझे लगता है कि हमारे यहाँ पर उत्तर प्रदेश में बहुत जरूरी है कि भाषा को हम लोग के माध्यम से एटलीस्ट जो फाइनेंशियल मैटर्स है उसको पहुंचाएं, बिकॉज हम लोग एवरी ईयर फाइनेंशियल लिटरेसी कॉन्क्लेव करते हैं, और मैं दिखता हूँ बॉम्बे से कोई अगर आता है तो वो इंग्लिश में बोलता है और वो आधी बात तो वही खत्म हो जाती है स्पीकर के स्टार्ट होने से. I nothing against English language, I think all of us do understand, but I think that course content and curriculum has to be somehow made so simpler because as you started, Manik, with the esoteric as a word, I can use arcane as a word, but esoteric. But the point here is that people will not understand. So commodity is an issue. As soon as you talk to, in fact, for me also, I have an account in gold, commodities trading. It's very difficult to understand FNOs and, do that, how to make money. Some of my friends have made money. So for people like us also, it's difficult. So how we take it to the people in the most simplest way, that is something, the challenge for all of us also. So which is where we would certainly expect a lot from Mr. Chaudhary. So, and I'm sure all of you can do it. So thanks a lot, sir, for, I think, sharing your views and sharing your, thoughts on this session today. Professor Kansal, I think what you have shared, sir, about, I think, NISM courses which are there, I can also share with you. NISM, because we are actually working with SEBI and we can share the details with you. And also on the internship opportunities also, we can, certain organizations, including MCX and NCDX, they have offices and it can be provided also here. So those things we can, and thanks a lot, sir, for AKTU entire team putting it all together for such a wonderful webinar today. And last but not the least, Mr. A.K. Mathur, I think, who is the, source of inspiration and this thing for everybody, and the team, Lucknow management. So thank you very much for this wonderful session. I find it, I was really glued to it while video was off, but I was certainly very much keen to understand and see that how it can, help us, because it's our mission to see that how financial literacy can go deeper into the UP market. So that's how we feel very passionate about. So thanks again. Thanks a lot to all of you. आप सभी को बहुत धन्यवाद. बहुत.
Thank you.
और नमस्कार, sir.
Thank
Thank you.
Namaskar.
You formally close. Thank you.
Thank you.